There is a natural tendency in markets to react, sometimes rapidly, to individual events, even when those events are unlikely to form a really important part of longer-term policy. Brian Lawson, IHS. Following the result of the Italian referendum, the euro dropped to a 20-month low. Do you see this trend continuing as we head towards a year full of European elections?
We certainly see the risk for ongoing political uncertainty within Italy. There is a growing momentum which suggests that the Partito Democratico might actually wish to hold a general election sooner rather than later. A number of quite prominent members of the party have spoken in favour of that. And we get the impression that Italian political figures are recalibrating their approach to political dynamics with a view within Partito Democratico that they might actually benefit from getting the polls done quickly and to benefit from the 40-odd% who voted in favour of the referendum rather than allowing some of their opponents to gain greater momentum over time. So political uncertainty is going to run high in Italy. We also have the immediate issue, potentially as soon as literally this weekend, in respect of how Monte dei Paschi will be rescued and what will then take shape in terms of future discussions with the European Union as to what represents allowable or non-allowable forms of state support. There's a lot of uncertainty regarding the overall condition of Italy's financial sector rather than just that one bank.
Thursday's ECB announcement involved an extension of its quantitative easing scheme, but a smaller volume than most expected. How do you interpret this move?
We basically see the ECB to have made a compromise decision yesterday. Our understanding is that Mr. Draghi himself would have preferred to retain the €80 billion monthly purchase size and proceed with a more aggressive continuation of the program during the course of 2017. There was pushback to that from a number of northern European states who were worried that effectively the ECB will be dominating markets for longer than strictly necessary and in greater volume than potentially needed. However, this is not a classic exercise in formal tapering. The ECB made very clear that it reserves the right actually to re-expand the program in the event that markets fail to perform as desired and if there were to be signs of financial fragility. And overall, it is actually extending for longer, albeit in slightly smaller amount than the market might initially have hoped for. Overall, the ECB will remain a support for a large part of the market for much of 2017.
The Chinese yuan was down against the dollar early in the week after Donald Trump tweeted criticism of China's currency policy. Do you think the markets will continue to react strongly to Trump's tweets and possible policies going forward?
Basically, we would assess that there is a natural tendency in markets to react sometimes rapidly to individual events, even when those events are unlikely to form a really important part of longer-term policy formation. We're not at the stage yet where we really can comment on the likely policies of the Trump administration. There are a number of key appointments to be filled, the government has to take office, and there's a long way to go before the political process actually fully defines likely policy. So markets will react to tweets, they'll react to headlines, but actually they won't necessarily be reacting on the underlying likely fundamentals. We therefore think that a lot of these initial movements will actually cancel out fairly promptly once people realize that there's a long way to go before a perhaps initial knee-jerk reaction is translated into actual policy. And indeed, Mr. Trump is a somewhat charismatic politician who uses media in a more aggressive way than many others have done in the past. That does expose us to perhaps slightly greater short-term volatility around such tweets than actually is legitimately justified by the likely form of policy that will take shape later.
Thanks, Brian, for your expert views. That's all for this weekly wrap-up with myself, Jack Everett. But Celeste will be here on Monday for the week ahead. Until then, goodbye.